joining this evening Corporate Connect, as well as our audience from Facebook Live. This webinar is organized by SIAS and supported by XGX. We will kick off tonight's webinar with presentation by Mr. Geoff Howie, Market Strategy from SGX on recent market highlights. Mr. Geoff Howie, please.
Thanks so much, Eileen. Sharing the screen now. And good evening, everybody. And thanks very much for having us open the evening. I just wanted to reiterate, of course, everything that we present is obviously educational and based on facts. And what we're going to do is quickly give you a market wrap. The market has been moving and changing so much, particularly since the morning of the 24th of Feb. And what I wanted to do is just quickly focus on what the key broad market drivers have been, how it has affected and impacted our stock. So the Straits Times Index, it's gained 4% so far in the 2022 year to date. That ranks among the most defensive indices across Asia Pacific. The FTSE Asia Pacific Index has actually declined 10% over the same time. The most defensive index across the region has been the Jakarta Composite Index. Plenty going on with consumer confidence in Indonesia, and that's seen the JCI gain 6% in SGD terms. Singapore and Indonesia also make up the majority of the FTSE ASEAN All Share Index. So that Southeast Asian benchmark has gained something like 1% in the year through to the close today. And as I said, that's versus the broader region, which has been, very driven by declines in China's stocks, with the APAC index down actually 10%. Now, the first overarching driver of the financial markets really have been the inflation concerns, which have seen that earlier than previously expected withdrawal of accommodative monetary policies across the globe. Now, those inflation concerns had seen really very divergent sector returns, very much like the sequentially uneven global economic recoveries we saw span 2020 and 2021. That obviously fueled these different returns over the big sector stocks. The effect of the higher inflation has seen the bank sectors among the strongest global stocks right up to mid-February, and then everything has changed. So the second big overarching driver of the year this far has been the Ukraine crisis. So since Russian President Vladimir Putin authorized specialized military operations in the Ukraine on the 24th of Feb, the global stock market has seen much heightened volatility, measured reactions across all the different stock sectors as well. It has seen the oil and gas sector lead the global stock market, while fuel and travel dependent airlines have been the least depending stocks over the past 14 trading sessions. So expectations for the pending US FOMC rate hike, which will be 2 a.m. on Thursday morning, have declined from 50 basis points to 25 basis points. So banks have been among the least performing sectors over those 14 sessions, while the REIT sector, on the other hand, has ranked among the most defensive sectors across the world alongside those bigger energy and utility sectors. So between 23rd of March and 15th of March, the STI declined something like 5%, weighed by global bank stocks declining 7%, and the FTSE APAC index declining 8%. Like the recent global sector moves, the past 14 sessions saw Sembcorp Industries lead the Straits Times Index, but 5 of the 7 STI REITs also ranked among the STI's top 10 performers, while the banks ranked among the top 10 least performing stocks for the period. And in fact, when you look over the last 14 sessions, most sectors across the board have seen a pickup or a notch up in their annualized volatility levels, but REITs have not. REITs have actually not seen any change to their volatility, while energy stocks have seen their volatility levels almost double. So the trio of DBS, OCBC and UOB, they make up 20% of our day-to-day turnover, 20% of the market cap, 40% of the STI. Banks, as we said, they borrow short, they lend long, and they maintain these positive correlations in their net interest income to US interest rates. So DBS's management noted a few weeks back, the bank maintained a net interest income sensitivity of 18 million Sing dollars to 20 Sing million dollars per basis of US dollar rates. So it implies a 25 basis point rise in the US interest rates on very early Thursday morning equates to a 450 to 500 million of additional net interest income. And you can see the combined net interest income of the three banks in this bottom right chart, right up to the December quarter. Now, of the trio, DBS's net interest income was also the most sensitive of the trio amid the US interest rate cuts of 2020. And from the fourth quarter of 2019 right through to the fourth quarter of 2021, DBS's net interest margin declined something like 40 basis points from those extraordinary low interest rates. While at the same time, the higher proportion of current and saving accounts to its overall customer deposits has also grown significantly from 59% at the end of 2019 to 76% at the end of last year. So the other key growth drivers for the trio include increased digitalization, which we'll hear a lot more about tonight, the digitalization overarching economic theme, particularly across the region, the broadening of wealth management services, the continued focus on supply chains, growth markets, and of course, the ability to keep allowances low. On the valuation front, what was really interesting over the last 3 weeks was that the average price to book ratio, which compares the current market value to its book value of the stocks, that price to book ratio, average ratio, went back to within the range of the top quintile of global banks and the top quartile of global banks. So basically your price to book average for the trio came back to around 1.20, which was very much in line with the global banks, the top 20%, the top 25% in terms of market value. And that actually followed on from mid-February when the banks were particularly strong, but their valuation was stretched. The average price to book of the Singapore trio stretched up to 1.40, 40 times its book value. And that was a 10% premium at the time to the top quintile and the top quartile of global banks by market value. And very much throughout 2019, 2020, 2021, the average PB or price to book price to book value of the trio was always very much in line with that top quintile and top quartile. So what this has done is we've seen the three banks, which had averaged 17% gains as of mid-February in the year to date, have trimmed those gains down to 7% as of the close today. DBS, OCBC, and UOB have averaged 17% gains, as I said, in those first 6 weeks, and then declined something like 10% over the last 3 weeks or so, 4 weeks or so. So what's interesting too is these faster moving markets have really upped the tempo of rotations and rebalancing and trading activity. So of the three banks, it's OCBC that really tends to see more retail trading in its stock on a day-to-day basis. And on the Tuesday session last week, when we had those declines, those bigger declines, OCBC saw a volume-weighted average price of $11.35 throughout the day. Now, there were net retail inflows of close to 40 million Sing dollars during that day. Then 2 sessions later, come Thursday, the rebound had seen OCBC VWAP, the volume-weighted average price, at $11.70, 35 cents higher, 3.1% higher, with net retail outflows of $10 million. So we're seeing a lot more sharper rebalancing rotations in stocks in a much shorter time frame than we saw with the more continuous type of softer trend trading that we saw across 2021. For the REIT market, the normalization of interest rates, it had supported banks, but the fast interest rate development since the end of 2021 through the first 6 weeks of the year had really weighed REITs across the world. They were among the lesser performing sectors globally. But the outlook for the immediate higher borrowing rates, which is less high than it was, or less hawkish than it was 3 weeks ago, has seen REITs over the last 3 weeks become one of the stronger performing sectors in Singapore and across the globe. So as we know, we've had the REIT sector for the past 20 years. We have a combined market cap of 113 billion, which translates to 12.5% of the combined market value. Now, the reopening theme is a key driver for the retail and the hospitality segments of the REITs, while commercial REITs have continued to pivot to tenants in industries earmarked for growth like technology and health and so forth. It's the industrial REITs that have been able to contend and work off the resilient manufacturing and trade activity. So if you look over the past 3 years, APAC listed industrial REITs. So there's something like 70 industrial REITs listed across the world, and half of them are actually in Asia Pacific. And if you look at those 35 to 40 REITs, the industrial REITs listed across Asia Pacific, they've averaged 40% returns over the past 3 years. You then look at the rest of the REITs across Asia Pacific, and the rest of the REITs have actually averaged only 5% total returns. So industrial REITs, as we said, have been able to work off the resilient manufacturing and trade activity. And I should also note, healthcare has also been in focus, and of the 150 REITs listed across Asia Pacific with a market cap of at least $500 million US, you've got Parkway Life ranking among the top 5 performers over the past 3 years. But just looking for this at this year, if you look at that same group, that 150 REITs with that market cap of $500 million US, Suntec REIT has actually been the strongest performer across APAC for that category of REITs, the bigger REITs, in the year to date with a 12% gain. So back in the fourth quarter of last year, remember we did, with those growth numbers that were reported, it was reported that was this emerging recovery in the MICE events and the weddings. However, Suntec REIT, which owns, I think it's 2/3 of the Convention and Exhibition Centre, it did note back in January with its results that the recovery of the convention business is highly dependent on the further easing of restrictions for large-scale consumer corporate events and so forth. So the VTLs and the loosening of restrictions remain the upside driver for Suntec, while of course the upticks, and we are seeing upticks globally now in COVID-19, that does remain a downside risk. Quickly moving on, and I won't be much longer than hopefully another 8 minutes. So of the $1.4 billion average turnover we've had across our stock market for the first 2 months of this year, our 100 most traded stocks make up the bulk of the trading activity. They make up 95% of the day-to-day turnover. They make up close to 75% of the total market cap of our stock exchange. The 100 stocks, they represent all 13 sectors, with representation ranging from 32 stocks for the REITs to the 1 stock Sembcorp industry representing utilities. And as we can see in this slide, that utility sector, in addition to the energy sector and the consumer non-cyclical sector, have been the most consistent performers in terms of average price performances over the first 2 months. In terms of net institutional inflows, as many as 8 sectors have been recipient to inflows in both January and February. Telecommunications, real estate, excluding the REITs, consumers, the both non-cyclical and cyclical, utilities, financial services, excluding the banks, energy, materials, and resources. So Singtel has booked the highest net institutional inflows of all the Singapore listed stocks so far in the year to date. The 440 million combined net institutional inflows for January and February followed something like $88 million of net institutional inflows in the second half of last year, and a 4% total return, but $390 million in net institutional outflow in the first half of last year, and a 1% decline in the first half of last year. And as we know, and I will point it out again because digitalization is a key theme for our presentations tonight, Singtel is also pursuing an ongoing strategic reset to develop new growth engines in its ICT business and its digital services, and it aims to transform NCS into an Asian B2B digital services champion. And you can see in this lower chart too, on that, the technology sector has continued to see net institutional outflows in Feb. And that followed January as well. Whereas what we saw for the REITs was the outflows in January, but the inflows in February. I'll move on quickly because the commodity stocks have also been in play, as particularly over the last 3 weeks. So the world's biggest ingredient in the energy mix, it still remains oil, and it's continued to build on its 2021 gains this year. So the Ukraine crisis has had this significant impact on oil explorers and producers, mostly upstream. Since the end of that 23rd Feb session, or since the 24th Feb morning, crude oil has moved from $96 a barrel on the Brent market to $139 a barrel on the 7th of March and back to $101 a barrel at present. A couple of weeks ago, OPEC announced it would stick to its original plan for a gradual production increase in spite of the recent surge in prices. Now, OPEC plus support, geopolitical tensions, along with lower global production capacity from all that reduced investment over the past 2 years, they were always poised to be key upside drivers for the price of oil this year. But meanwhile, the thing is with right up to last week, the key potential downside driver, that was COVID-19 resurgences and variances, had not actuated. But now we've seen some closures and some disruptions from this uptick in COVID cases, also tempering the price of oil. So that has been a key part of it as well as the potential for higher output from uncommitted OPEC plus members, and of course, higher output from US shale oil producers. And of course, the new sources of alternate energy are also downside drivers. But the clear measured impact across the stock market has seen oil and gas stocks lead global stocks since the beginning of that military action in the morning of 24 Feb. And fuel-dependent airlines and hospitality stocks have been the least performing stocks over the 14 trading sessions. Within the oil industry, the biggest gainers have been the upstream explorers and producers, or that basically have oil or gas reserves or resources, and making up the majority of their assets. SGX listed oil and gas exploring producers, Rex International and RH Petrogas, have ranked number 45 and number 32. Sorry, Rex has ranked number 32, RH is ranked number 45 in terms of the most traded stocks so far this year. Rex is up 8% and transferred from the Catalyst to the main board last week, while RH Petrogas is up 53% in the year to date. For the bigger international players that transcend, I guess, the value chain, they have been stronger performance so far in the year to date as well. So ExxonMobil, which is around 8% upstream, and does refine on Jurong Island, obviously, but listed in the US, is up 8% since is up 8%. You've got Shell PLC, which is 4% upstream. It refines on Plough Buckham and is down 3% since 23rd of Feb. So ExxonMobil is up 8%. Shell is down 3%. The duo, however, are up 37% and 17% respectively in the year to date. Aramco, which is around 50% upstream, is now the world's second biggest stock by market value as well, is up 12% year to date. So I should also mention Indonesian coal futures are trading at around $114 US per ton at the close today. That's up from $90 per ton on the 25th of Feb. It's up from $66 a ton at the end of last year. That's obviously impacted geoenergy resources and golden energy, as you can see in the chart. And I've got these commodity plays, and you can see their turnover rankings have soared this year as these stocks have come into play. The Bursa Malaysia CPO futures have also been impacted by the outlook for supply disruptions on sunflower oil. And May's CPO futures are traded around 7,000 ringgit per ton last week before returning to 6,200 ringgit today per ton. I should also mention Kencana Agri, while ranking outside the top 300 stocks by turnover, it has recently booked its strongest weeks in turnover or trading turnover since December 2016. And food and agribusiness leader Wilmar, it's up 10% year to date. It saw, you did see, and as I said, the trading tempo has really stepped up a notch, because Wilmar kind of saw a comparatively quiet trendless 3 sessions that really spanned 25th of Feb back to the 1st of March. And that saw around $7 million of net retail inflows, and then a VWAP at the same time of around $4.40. And then for the next 7 sessions, spanning 2nd of March to the 10th of March, Wilmar booked $44 million of net retail outflows and a VWAP of around $4.63. Olam International is also pursuing its restructure, which will see it spin off its Olam Food Ingredients as well as Olam Global Agri Unit. And it's scheduled to relist tomorrow as Olam Group. But once OFI and OFA, I guess, are spun off, the group does plan to invest in startups involved in digital technology. Again, that's, as I said, a key overarching theme, as well as sustainability elements. So I guess to conclude, broad macroeconomic concerns, they have obviously included the higher energy prices, supply chain pressures, and COVID-19 constraints. Now, the daily global cases of the less severe Omicron wave, they were reclining for a long time since late January. So we had that daily peak of 3.4 million cases at the end of January, and then had come down to 1 million cases a day. But as we said, is starting to tick up again. But nonetheless, most focus has been on energy prices and supply chain pressures, because that's the 2 current sources of the current wave of inflation. Container shipping market rates, as represented by our Freightos Baltic Global Index, they have not seen much upside since September, but the index still remains 6 times the pre-pandemic norm. Okay, so that's not a good thing for. That's an indication of supply chain bottlenecks per se, still pretty elevated. There's been enough cues on the macro front as well, but aside from that, a number of Singapore stocks, as we said, they continue to take the micro lens, from engaging strategic initiatives to either pivoting or transforming or restructuring their business segments to improve shareholder value. And that includes 5 of the 7 strongest STI stocks in the year to date: Sembcorp Industries, Keppel Corp, Wilmar, which completed the YKA listing back in October 2020, Singtel, and Capital Land Investment. And as I said, there's all these very strong overarching economic drivers, such as digitalization, mentioned again in the budget as the first priority. And it is a particularly strong growth driver across Southeast Asia. So I'm really looking forward to hearing more from Mr. Henry Tan and the team at OxPay Financial right now. But if you do need any more information from us, please, again, don't hesitate to email us and let us know, and reach out to us through SIAS. So thank you very much, and I'll end here. Thanks, Eileen.
Thanks, Geoff. I think, in my opinion, the stock market is less crazy than the samurai guy in Bangkok.
I would certainly hope so.
Yes. Thank you.
Thank you.
Up next, may I invite Mr. Henry Tan, Managing Director, and Mr. Ng Kok Peng, CFO of OxPay Financials. OxPay Financial is one of Singapore's largest digital payments company, with an annual total payment volume of more than US 300 million. Mr. Tan, please.
Sure. Over to me. Hi. Thanks, everyone. Thanks, Jeffrey, for the very informative session as well. Got quite a few tips from there. Thanks, Eileen, for the introduction. Maybe I can go straight to the reviews of the financial result for year 2021. If I were to move straight to the first slide that is presenting right now, in short, we have all pointing upwards to the north in terms of touch points, where we basically enable payment acceptance. That's how we define touch points. And of course, 65% growth year on year in terms of acquiring number of merchants, and as well as what Eileen has mentioned in terms of our total payment volume that is processing with our merchants, which is 100% year on year growth. Moving to the right, basically more on our core payment system, which we classify under Merchant Payment Services, MPS. We enable new payment methods like Shopee Pay, which I will touch on a little bit more later, as well as Line Pay, which is more predominantly in Thailand. Right? On the last pointer, which is the partnership, which is something that I want to talk a bit more later on. In line with the market hype on buy now, pay later, we have worked with IOU Pay, Tomi, and Pay Slow within the Southeast Asia region. Yep, next page. Right, this is probably not the latest one. I think just got freshly published. We can go on the next slide. Thanks. Okay, touching on the payment processing volume, right? Just to give a little bit more definition, payment processing volume basically means when a consumer buys a product in a store or online, $1 for $1, if they want to purchase a ticket item of $10 and transacted over on OxPay payment gateway, we recognize that as our payment processing volume. Zooming down on the left, if you can see that it's quite a significant healthy growth from 236 million to 400 million across all our wholly owned subsidiaries, Singapore, Malaysia, and Thailand. And over to the right, which I explained a little bit earlier on our NPS revenue and transaction take rate. To touch a little bit more on this, NPS basically means the merchant payment services, enabling all our payments method. It could be Visa, Master, GrabPay, Shopee Pay, Singtel Dash, Alipay, WeChat Pay, so on and so forth, right? And transaction take rate is basically in our payments term, it's called merchant discount rate. So if you can see that, there's a kind of, not a usual pickup rate in terms of progress, because it came down in 2019. It was 3.3. It came down to it went up all the way to 3.8 and then came down to 2.8. This basically represent that we are also going across enabling a lot of alternative payment methods. To give an example, right? Traditionally, Visa, MasterCard have a high take rate, could be from 2.8 to 3.5%, right? And then, of course, then with the rise of alternative payment methods, which is the likes of PayNow, the likes of Singtel, Dash, the likes of Shopee, particularly that take rate are traditionally lower, okay? And to qualify, right, take rate doesn't mean that I have smaller margin, which I will probably explain later if there's more question on that. Let me move to the next slide. Thanks. Okay, a snapshot of where our merchants are residing in terms of network. Obviously, Singapore and Indonesia comprises of majority of merchant right now. Thailand, I would say slow, but Malaysia is picking up. Reason why Thailand is slow, I think partly due to Mr. COVID-19 that has limit a lot of travel, whereas all our retail outlets are very much affected. So the focus for Thailand is really on e-com as well. Similarly for Malaysia on a segment. Moving to the right slides, that basically shows that we have not stopped despite the COVID. We are still acquiring merchants to boost up all our payment processing volume and revenue. Yep. Okay, just allow me to share our 4E growth strategy. This slide basically explains the expand and the enhance, which I go to the left. How are we expanding our customer base? It is very much within the digital economy, right? That we work with, that or rather allow us to work with a lot of partners online in a digital way. So the first pointer here on the left is we work with Hive Ventures. So you might not know Hive Ventures, but they are classified very similar like a Grab in Thailand, where they own more than 4,000 F&B restaurant and merchants, and as well as 200 suppliers in Thailand. What does that mean for us, right? Basically, when we are connected to them from a technical integration perspective, we help this platform digitize and the payments in terms of, Hive would have a consumer app that is to be downloaded like a Grab for all the consumers that wanted to do a purchase, let's say in their F&B. And then Hive will also be using OxPay payment gateway for the purpose of acceptance, as well as the merchant itself. Hive will enable them to allow them to pay their suppliers on the same ecosystem within the platform itself. And all to end, we will be the exclusive payment provider for this particular channel partners. So that's for in Thailand. To go on the second point, we have GrabPay that's enabled on Watsons. That's late last year or early this year. Very good usage that's coming from out there. Also to add on, we recently took over Singtel Dash to be enabled on Watsons via our terminal as well, right? Go to the next point, which is solution to Eatbox. Eatbox is not new to us. We have been collaborating with them exclusively for the last 1 year, I would say, or 1.5 years. So they start off with this concept of atas, food court run by a lot of young entrepreneurs with some gourmet kitchen, burgers, you name it, or they have it basically. Their Eatbox concept is actually located at Tekka Mall. So if you're free, please go there and get a feel of it. Air conditioned with good food and good drinks. So what we do with them for the first project is obviously in Eatbox, and they have kind of expanded their footprints, not just in Tekka Mall, but also in a couple of places. I would say prominent places, to name a few. I think they took a couple of pop-up stores in Lau Pa Sat Kopitiam. So we are also following through them in terms of the acceptance where payment is concerned. So I think they have a couple more enablement of pop-up store within CBD area, and we are following through from that. So that also allows us for our customer base expansion. Going to the next point, likely more in Malaysia, very focused on what we do in our niche market. We have won a couple of schools, education in that sector. The latest one was one of the largest private learning centers in Malaysia with more than 60 branches nationwide that has been enabled for our Malaysia payment gateway. Yeah. The last point basically, is also an extension of our project with MUIS. MUIS, for Singaporeans, I think, or people who live in Singapore, they will know that they are a government entity that manage all the malls in Singapore. So we start off by, popping into enable their collections for Ramadan last year, and I think we will do the same for this year upcoming. For all the payment methods that we provide for them, Visa, MasterCard, PayNow, eNets, so and so forth. So what we have done more with them over the past of 1 year, which is work in progress, is to also extend to their schools. So they operate schools as well. They also help all the hawkers to do renewal of halal certification. So you can imagine all these rails are going through them, and we are the payment partners behind. So remains to be seen that there's more volume coming in from MUIS as well, as far as Singapore is concerned. Yep. Collaborating with more BNPL partners. As I mentioned earlier, we have Atomi, Pay Slow, and IOU Pay, both in Malaysia and Singapore. We are pretty agnostic in terms of partnering, right? We don't say we work exclusive only with one. So the idea of our platform is to be agnostic and power packed with as many credible partners as possible. So we are still reviewing, and we are not, saying no to any of the buy now pay later, including, traditional banks that wants to come into this space. Yeah, so watch that space. On the bottom left, which is something that we recently announced, the potential acquisition of AppPOS. I would say many of you may not know AppPOS, this name, but you might be familiar with names with merchants that they serve from the F&B sector. To give you to quote some name, they have merchants like Old Chunky. They have merchants like Itacho Sushi, Hans, Jian Xiao Fish and Chick, and a couple of very prominent players in the market. So our strategic partnership will be more of, today they serve these merchants. and they are serving them on payments with another partner, which there isn't any mutual benefits, right? So the strategy to go with AppPOS is to really convert all their current merchants or even new merchants together to be enabled on OxPay payment gateway. So the number there, they are currently providing or managing more than 300 million of payment processing, and it's growing. So that is the potential migration, I would say, or revenue that we can recognize from there if this deal goes through. Moving on to the second E, which is enhanced product and services. As mentioned, we have Shopee Pay and Line Pay that is soon to be enabled. Integration in progress. Going down on the complementary services, which I also touched on, buy now, pay later. Social media live selling solution, which is also correlated with Facebook Live that we did last year. And a couple of we call it KOL, right? Key opinion leaders, and as well as Hive in Thailand does, or rather they own a platform that allow influencers to do product and sales on the platform itself. The third pointer, which is the partnership with TransSwap. Basically, this is an extension of our global reach in terms of cross-border remittances. In short, if a merchants want us to help them, pay their suppliers, or even pay to a consumer in across, out of Asia Pacific region where TransSwap have, that is where our strategic partnership comes in terms of collaboration. Yep. Take note, TransSwap is also have the capability to enable digital bank account on behalf of our common merchants as well. The latest pointer, which is very fresh, it only came out, I think, yesterday after lunch, it is the acceptance of crypto. When my acceptance of crypto for now in our rails, we are still settling fiat currency, which means still Sing dollars to our merchants. In short, merchants are not taking any risk, or neither OxPay is taking any risk, because we are partnering with MAS DBT license, crypto license with AAA. They are the one that is converting the fiat from crypto to fiat on our behalf. The last pointer on the right bottom, not something more not so recent, but it's also beginning of the year. Entering into the blockchain space, which is by Nous and Veritech, to start progressively entering into the blockchain, metaverse, AI. So we want to be in the game as well, right? So something for us to ponder how we build it and align with the market trend. Yep. Okay, I'll go a bit faster on the rest of the 2E, which is extend geographical reach. Today we have Singapore, Malaysia, Indonesia, and Thailand. With our partnership with TransSwap, that expand us into a couple of touch points as far as cross-border remittance or cross-border money transfer is concerned in UK and European markets. We are also in the midst of reviewing our reach in Cambodia, Vietnam, Philippines, and Australia within the next, I would say, 1 to 2 years for sure, as well as our regional partnership with our principal, which we really signed in Singapore, which is WorldPay. So WorldPay is owned by FIS. So that is where we want to grow with them in terms of partnership. Moving on to the right, enlarge our company portfolio. That is where I talk a little bit more on AppPOS, as well as applying for more additional license where applicable to fulfill all our merchants' services within the region. Yep. All right, I'll take a break here and then move over to Kok Peng for financials. Thank you.
Thanks, Angry. Hi, good evening, everyone. Right. So from here, basically, this is our revenue, our gross profit, and adjusted net incomes. So from FY 2019 to FY 2021. So from the first slide, you can see basically actually we have what we call it a healthy growth in terms of revenue, because close to 40% year-to-year growth. So for all the way from 8.7 million to 17 million for FY 2021. Then in terms of gross profit, of course, I think, same thing, we have a healthy growth in terms of gross profit as well, all the way from 3.9 million in FY 2029 to 10.6 million in FY 2021. Right. So from here, basically, net adjusted income. So for the past 2 years, basically, we are making a loss. Then we come to FY 2021, we're making 3.2 million adjusted profit. Next slide, please. Right. So here basically is our revenue segments. So from FY 2019 to FY 2021. So once again, Singapore is our home country, so it's also our major revenue contributor, right? So yep. So DCES is about 35% of the total revenue of the group. Then for MPS is about 65% of the total revenue of the group. Right. So this is a revenue by market. So from here you can see basically Singapore is as what I say just now, is the main revenue contributor. So in FY 2021, we contribute about 11.2 million total revenue. Then Malaysia is about 5.6 million revenues, right? Yeah. So the others belong to Thailand, which is at this point in time still quite small, in terms of the group revenue, right? Yeah. So this is our financial position. So from what we can see, we have about 26.4 million cash and cash equivalent. So in terms of loan, so actually it's quite minimums, right? So the net cash position is about 25.6 million this year as compared with 2 million last year. So in terms of total assets, so we have about 30.7 million total assets. So out of which the fixed asset is about, so-called intangible asset is about 500,000, right? Out of the 30.7 million that we have. So of course, I think once again, the big chunk should be the cash and cash equivalents, right? So the total liability, same thing, about 24.7 million. A large of it is due to the amount due to the merchants, right, that we're going to settle. So the last one will be the total equity. So once again, our total equity is about 6 million as compared with negative 0.5 million last year. Right. So this is our cash flow. So basically, we're generating about 20.2 million from our operating activities. It's a net cash increase, right? Then the total net cash and cash equivalent during the year will be 22.8 million increase. Right. Hi, Henry, over to you.
Sure. I actually wanted to, I have a couple of questions in advance that I would like to address, which could probably answer to my deck on why OxPay now, but I want to make it more interactive. But before that, I have a question, right, from the session. What makes Malaysia listed revenue different with OxPay? The stock price goes in different ways. So I'm not very clear about this question, but as far as the stock is concerned, can I refer that to Gemcom to answer? Right.
Yeah, sure. So maybe I think we can go to the Q&A later, because I think there's a few more slides, and then I think Benjamin will help to moderate the session later also.
Sure. Okay, can. Right. So then I will go through the slides right now. Yep. Okay, why OxPay now, right? I think there's a couple of key points I want to bring the attention to. High barrier to entry. I think that's quite evident, given that I just used a recent digital payment tokens license issued by MAS, right? There are more than 170 applicants. And then end up, as of today, as far as I'm concerned, there are only 5 or 6, the latest being Paxos, being awarded. So definitely, given that, saga that's went through, I very much believe that the entry of level into this payment space or payment processing is very, very high on entry. And that's where we have a very strong foothold in terms of credibility, in terms of where we had in the region with 4 markets. It's also a head start for us to win the market as of this. On the second point, the rise of digital wallets, I think I had always shared with people, while we all do not welcome COVID, but the fact of the reality is COVID-19 has also accelerated a lot of digitalizations, given the adoption of Trace Together, as we all know. And what makes us even more stronger, because most of, or rather all our payment methods, including Visa, MasterCard, are of QR, which also means that when anyone wants to buy a product at a retail front, our terminal will generate a QR equivalent to anyone to take out a phone to scan the QR for Trace Together entry, right? So the adoption is there, the trust factor is there. There are a lot of push from the government on adoption of cashless payment. So all this came in place, and this make us also a very good place in terms of position to adopt this payment enablement. The third one will be cross-border cost advantages. Why would people say, or rather, why would you think that is advantageous, right? I think given the level of license we have, you can take it as we are also managing accounts receivables and accounts payable, right? How does that make sense, right? From a cash management perspective, accounts receivables is when I acquire a merchant, I help them collect payment. That's account receivables, right? Cross-border transactions will also means that if a particular merchant buys from a supplier A or B in overseas, let's say in Vietnam or in any part of the world other than Singapore, we can actually help to facilitate within the ecosystem. So we help them to collect, we help them to make payment. On the next point, which is what I mentioned earlier, helping merchants to digitize their business is really all about enabling them through APIs, through application services. Yeah. The last pointer will be customer acquisition model. This is basically what we do, other than just hiring individual sales to go for one by one model. The ecosystem has allowed us to quickly adopt, to have partners like IOU Pay, the buy now pay later service provider, as well as entering into contract agreement with a lot of fintech partners within the ecosystem. Yep. Snapshot of our competitive landscape. We are still small, which also means that we have a lot of upside, from a Southeast Asia perspective. Can I move on? Okay, basically these are investment merit, telling you why do you need to invest in us. The rise of digital payment is still key, and a lot of people are still talking about it, given that the digitalization payments is not something that we can forget about it, because COVID-19 has also adopted a lot of practices and behavior, driving the behavior for us, which is to our benefits. Attractive valuations, high barrier of entry that we spoke about, high cash flow generative, which is also evidence in our financial statements, and of course positive operating leverage. Just to take note, I'm quite bold to say that we are, whether you see us as fintech or see us as a technology company, we are one of the few that are profitable. Yeah. All right. I think we can go straight to the Q&A, right, Elaine?
And may I invite Koping as well to join us for the Q&A. Can I also just invite Mr. Benjamin Goh, Head of Research and Investor Education from SIAS. He will be moderating the Q&A session. Over to you guys. And also participants, you may input your questions in the Q&A session, as well as our Facebook Live audience. You can click on the link and post your question here as well. We'll try to answer as many questions as possible. Over to you.
All right, thank you very much, Eileen. So very warm welcome to Henry as well as Kokping. Thank you very much for the very informative presentation just now. I also want to congratulate you on the huge jump in your profitability as well as revenue.
Thanks, man.
Yeah, so it's always very encouraging, for companies, to kind of show that to retail investors. I guess they're very excited. There are a couple of questions that were pre-submitted from the public. Some of them you've already covered. For example, the SWOT analysis as well as comparative landscape. So I'm going to kind of move on. And also, there was a question about when the company will reach profitability. That has also already been answered. So hence, congratulations again. So let's cover some of the other stuff which have not been covered in your presentation. You mentioned previously or just now that as of yesterday afternoon, there was a tie-up with a vendor to use what you call cryptocurrency as a mode of payment, right?
Yep.
Would you be able to kind of elaborate that as to how you want to go about it, and is there going to be any impact on your risk controls, and how is that accepted by your vendors, so on and so forth?
Sure. I think there's two things that I can share. One is in terms of payment methodology, right? Is it going to be a lot of a new business for us? The answer is no. It will be just like a drop-down menu, right? That we enable merchants today. You want to pay, but okay, I was trying to explain the user experience, right? So if I own a Gemini wallet and I invested in cryptocurrency, tomorrow if I go and see, let's say Watson, since Watson is one of my key merchants, not that they are being enabled, right? But I'm quoting an example that's to disclaim. Basically, someone can launch their wallet, on their phone, can actually pay their product or services through their phone by launching a Gemini wallet. Similarly, they will, launch their app and then do a scan at their terminal, and there they go. They can actually make a purchase immediately via their crypto wallet. How it flows, right? It will basically flow through our partners, which is regulated by MAS, called AAA. AAA is a crypto exchange that allows them to have the capability to accept their wallets, to be KYC, for example, and then pass through their exchange, and then to determine the crypto to fiat exchange, and then settle to me in fiat. When I say fiat, it's actually Singapore dollars in Singapore context, right? And therefore, I will settle to merchants in Singapore dollars. So if you hear this, end to end, actually, I don't take risks, and my merchant don't take risks. So basically, it's a baby step to crypto acceptance, to be in the game, to be in the future.
Okay, so I guess from the perspective, it's more like a turnkey solution. Your vendor, your crypto vendor will just take care of everything, and then at the end of the day, you get paid in fiat. All right, that's good.
Yep.
I guess with regards to that, you envision Bitcoin as a mode of payment, and anything else like Ethereum or I don't know.
Cautiously optimistic, depending on the regulations, right? I think in Singapore, as far as concerned, I need to see what MAS came up with. I'm mindful, given that that there's many gray areas. But I will definitely not rule out cryptocurrencies. Whether is it going to be launched by a central bank, or is it going to be a digital currencies that's going to be availed by other central bank within the region. It could be a China CBDC. It could be a Cambodia CBDC, which already launched. So entering into the ecosystem is very important for me. Understanding the rails, understanding the behavior, and be ready for the rails. I think that's what I'm more looking for, right? Preparing myself for the future.
Okay. All right. Thank you very much for that. I'm going to move on to a different question. There was a question that you were looking at in the Q&A. What makes Malaysia listed revenue different with OxPay? I guess when you did your revenue breakdown, that was kind of split out, I suppose. So is there anything special about that? And did that have any kind of impact on the stock price? I'm just going to leave it open. Yeah.
I think I can get maybe Kopeng want to address on the Malaysia listed revenue. I don't really understand. Yeah, but maybe Chuning or Karen can step on the stock price thing. Yeah.
Basically, actually, Malaysia Malaysia is run by one of our co-founders, Mr. Kim. So at this point in time, I think he's still in charge for the overall Malaysia operations. So as far as what we're concerned, Malaysia, they're still having a healthy growth in terms of revenue. In terms then in term of the bottom line, they are still profitable, right? Okay, so I think Malaysia, to us, I think we never be so worried. So then in terms of our trade, basically we take the money first before we pay out to our merchants. So I think so far so good. We are not seeing any issue on the Malaysia side. Of course I think we are looking for expanding. Then we need more revenue for Malaysia, then make more money for sure. Right.
Okay. Just to satisfy my interest, you mentioned just now that you get paid first before passing on the settlement or the payment to your vendors, right? How long is the gap between your AP and AR?
Usually
go ahead. Okay.
Yeah, so usually our agreement with our merchant is daily depends. Some is T+2, some is T+5. Right. Of course, I think T+5 means that usually you pay once in a week. Right. Yeah. Yep. So this is usually our turnaround time with T+2, 3+5. Yeah. So within the next 1-2 weeks time for the usual transactions.
Okay, because certainly it is a competitive advantage to have a significant float, right? So the gap between your AR and AP. So I suppose as OxPay grows in size, that float will become better, and of course you can invest it into working capital or something else. Okay, there was a question. Okay, dividend policy. Yes. Do you have an articulated dividend policy? Maybe you could explain that.
At this juncture, we don't have any dividend policy in place. Right. Then of course, I think, if we think that, at any point in time, of course, I think at this juncture, we're also looking for more investments, right? In terms of expanding, in terms of, to try to like acquisition, some kind like airports type of investment, right? Of course, I think that must be profitable. And because actually we do have some investment criteria in mind, before we invest. So maybe Henry can explain to you guys more. Yeah.
Okay. All right. And I think there was that question about the stock price. Was somebody from your team gonna walk through that?
Yes, yeah. So I'm CY, I'm the investor relations for OxPay. So I think for stock price action wise, of course, it's dependent on a variety of factors, like including I think the general market sentiment nowadays has not been very strong also. So I think that has also affected investors' appetite for stocks in general. But of course, there are many other factors that's affecting share price action, most of which is not within the group's control. So what the group can control is, of course, their fundamentals, which I think Henry's team has been doing a very good job in helping to improve the fundamentals, which has been reflected in the positive results in the FY 2021. So we will continue on with our active investor relation activities, such as engaging with the investment committee through SIAS. So hopefully the investment committee can have a better understanding of OxPay's business and the recent developments, and hopefully this will help to close the valuation gap in the long run.
Okay, thank you very much for that. There was another question coming in from our Q&A function here. Is there a MES requirement for OxPay to hold a certain percentage of your assets in cash? Because OxPay is similar to a fintech startup, right?
Kopeng, you want to take that on?
Yep. So of course, I think we don't have any specific regulation on that. But of course, I think we, as a regulated by MAS, we have to put certain amount in our performance bonds. Then we need to have what we call that special accounts, to dealing with all our merchants' money, right? So it's kind of a safeguarding to the merchants, right? Yeah. So I hope that answered the questions.
Okay, no, that's fine. My understanding is that MAS has got a relatively, I guess, large sandbox for fintech. So I don't think they have mandated this as of today.
Yep.
Okay, that's good. I think maybe one last question before we can sign off for the evening. So you had expansion into all these different countries. So obviously you are present in Singapore, and then you've got quite a big presence in Malaysia, Thailand, and Indonesia, right? Could you just maybe just explain a little bit about your expansion plans in all these different countries?
Sure. Okay. Thanks, Ben. I think given the market macro factors, I would not rule out. I definitely would want to go expand, but I'm adopting a very a cautious, conservative approach, right? Not to be too rushed on, try go into Cambodia tomorrow, and then not knowing that that it could be profitable. I think fundamentally my stance is very much more on, if I want to go into a market, I want to make sure that it is fundamentally strong, right? Why am I saying that? Because the way I approach is I will go in as lean as possible. When I say lean, it's very much that I will work with someone, let's say in Cambodia, right? In Phillip Capital or Phillip Bank in Cambodia, which is also a Singapore company, right? And then leverage on whatever they have, to do strategic collaboration. I will work with digital payment wallets that has a stronghold in Cambodia, like PayPay, PIPAY. In fact, I'm talking to them, right, to be honest. So whether do I need to obtain a license? Actually, different jurisdictions have different requirements, and depending on what you do I need to shadow first to get a license? Or do I need to shadow to operate first before I get a full license? Or do I go in and spend 100 to 200,000 to obtain a license? I think that in different jurisdictions, I will approach different way. So to answer your question, that is probably the way I would approach. Go in lean and make sure that I don't just serve individual markets. I would also serve a cross-border payment. Right. Let's say I have merchant in Thailand that want to start collecting in Cambodia, and then they would have also similar expansion plan from a merchant perspective to be in Vietnam or even in Philippines. So that is how I would approach in a very more conservative way. Yep.
Okay, so sounds like because the field is very open and jurisdictions are all quite separate, being able to understand the local market as well as to execute is, I guess, key for expansion plans for OxPay. Okay.
Right.
So thank you very much. We've run out of time. So again, congratulations on your great results.
Thanks,
and
man.
also having spent time with our retail investors. So looking forward to your next presentation. And of course, no pressure, but yeah, more growth, higher net income.
That's my KPI.
Okay. Elaine, over to you.
Gentlemen, for insightful sharing tonight. I think for so many digital e-payment nowadays and seamless payment, I can actually just walk out of the house with a handphone. Yeah, all right. I think we have come to the end of the session. Thank you everyone for joining us this evening. In case you have missed any part of the session, you can rewatch the webinar on the SIAS YouTube. Just to add on, Corporate Connect is a bi-monthly webinar. The upcoming Corporate Connect will feature UOB Group. Do visit our website to get updates on the upcoming investor education programs and initiative as well. Without further ado, thank you very much and have a good evening.
Thanks, Elaine. Thanks, everyone.
Thank you.
Thank you, everyone. Thanks, Elaine.
Bye.
Thanks, Ben. Thanks.